Good evening, all. Ira Epstein with your SPDR ETF stock market wrap-up. And this particular wrap-up has us sitting now at Thursday, the 26th of January, 2023, about 5 p.m. Central Time. Big up day in the stock market. We had GDP come out, not bad, 2.9% for an annualized basis. That'll change about, of course. But the market is just saying, hey, things are strong. Now, I am of the opinion that we haven't seen the full impact yet of higher interest rates. You know, the saying in the industry goes, it takes anywhere between a year to 18 months to see the full impact starting to come in of successive rate hikes. We've had a bunch of them, as you know, over the past 10, 11 months. So we're getting to that point. And as we get into the spring and early summer, we should see the impact. But does that stop this right now? No. And the Fed has its hands full with what they saw, because if you looked at the unemployment claims, they keep going the wrong way. Instead of the initial claims going up, they keep falling. So the labor market is staying super strong. We have GDP still strong, and the market's shaking its head and going, it doesn't matter what the Fed does. We're going to keep going up. Okay. Well, the Fed is next week going to raise interest rates, probably by a quarter point. We have the Bank of England coming on. Then we have the European Central Bank coming on. We got banks galore coming on doing this. But for the moment, we sit back and we enjoy the fact that the U.S. economy via labor is able to withstand a lot. Now, you're starting to see the impact on Visa, MasterCard, and other credit cards where things are slowing down is the consumer's credit card is starting to run up in the amount. So it takes time for these events to happen, but happen they will. When we take a look at Wayfair, and I happen to be on the site today for a short while looking for a cabinet that I need, you can see how it's whipping back and forth. It tried to exceed and go up more today. It finished a penny higher, gave up a good part of those gains. By the way, I still think that you're going to try to fill this gap in here, like I mentioned yesterday. When we come to the swing lines, the trend is up. Higher lows, higher highs. You're in trouble if you get under 50.88. What that would then do is suddenly, unless you get through 60.42, give you lower highs and lower low, and that could set up the break to get back to the 18-day average. First thing the market has to do is it's coming down to the zone, as you can see, of the 200-day, and it's got to figure out what to do there. The second thing it has to do is look at the Bollinger Band, which keeps holding the market back. You got over it 4 days ago, then you pulled back the past 2 days, and you're running against that. Is there anything bearish on the chart? No, I'm not trying to be a bear. I'm just saying the market has a gap, and gaps often get filled. And what are we doing with momentum? So when we look at momentum, both numbers today were above 80. Okay, that's today. If we go back to yesterday, both above 80. If we go to Tuesday, both above 80. Even Monday. So you have a full-fledged embedded reading. It tells me that on the pullback in the market, the pros will probably buy, and they'll bail when the red line closes under 79. I tell traders, and I don't mind saying this to you, the first challenge of a 200-day average, I give the market some berth with it. Is it going to be able to hold it? I'd like to see a few more tests before I make my decision. When we come to the lithium, that's your embedded reading. And the market is just each day going higher, higher, but not closing over the Bollinger Band. Classic bull market, not running the band either. It's just staying below it, but running over there. Now we're up to the 200-day average, closed over it. You're ready for a minor correction is what I'm saying. That correction should not be played for the downside until the red line is lost under 79. I look for the buyers to come in again. I'm going to stand back. I don't like to come in with new money at the 100 and the 200-day average. You're assuming it's just going to keep running. I'm of the opinion it's in a resistance area. Same in Apple. I know you'll tell me, Ira, it's just going to keep running. Got the embedded reading. Unlike the other two, these averages are above the market. So I do think the pros are going to buy this market on a pullback. And I give you away in the enhanced Bollinger Band course. When And if the red line closes under 79, they'll bail. I don't think they'll buy the market if it gets higher initially first, but I do think on the first reasonable break, and I do have a way of measuring that in my course. I'm not going to give it to you here, but it's all automated for you. Bingo. I think there's a number they'll be looking at. In AMC, we're starting to get bearish again. Now you got lower highs, lower lows, but the bias is up. So this is a break in a market that has bullish bias. The objective 486, we're not far away from it. We got to 510, and that's where the battle begins. If you close under 486, you get bearish one more time. So what the market really did is what we talk about. It got to the upper Bollinger Band, couldn't quite make it to the upper moving averages, and that was too much for the market to handle. In XLF, you have a lower low, higher high, overbought market. Bye-bye, nothing to really do there. In XLI, you have lower highs and higher lows. So you have a market that's got a slope down, picking up like that. There'll be an apex where the numbers reach, and where they reach is where the market now, against that 18-day average, has to make a decision. You're going up or you're swinging back down. Get under 98.80 and don't take out 101.03 and you get bearish. Get over 101.03 and don't take out 98.80 and you get bullish. You're right at the apex. In SOX, you just continue to run to the upside, adding another $6 today. This market has really done very well. Notice it closed near the day's high. I think it's going to try to make a run, potentially, towards the upper Bollinger Band. For those of you that are with me in my paid subscribers, there's a window envelope number in there you want to pay attention to. I'll show it again in the morning in the first thing. XHB, now we're going to get even more homeowner and information. And we are seeing that there is pent-up demand. Mortgage rates are sitting around 6.13%. People are coming out of the woods, if you will, to refinance, to buy. So there's probably going to be a pretty good market for the spring homes if interest rates don't take off. That's the big if they don't take off. And so far, 6% isn't stopping. 7% seems to stop the buyers. You get to that plateau, but then you fall back towards 6 and they seem to get aggressive again. What they'll do is they'll buy and they'll refinance eventually when the rates come down. If you just take a look at this versus a year ago, on a mortgage that's about $600,000, I wrote about it today in my report. It's almost $1,000 a month more in interest. I mean, it's quite a bit. So guy that's qualifying, he has to understand his game. In XLE, sitting up here against the upper band. No, I'm not interested in buying Bollinger Bands, but I am bullish. You've got your embedded reading. Look, both numbers are over 80, both over 80 yesterday, both over 80 the day before, and both over 80 the day before. I can go on and on. So what you're now looking for is when you get a break in the market, I think the pros will step in on the first break to buy it. Keep your eye on Chinese buying. This is the end of the first week of the lunar holiday. People start coming back the second week. I'm talking trade desks and all. And new orders start gradually coming in. Another week, February 5th, it's all over for lunar holiday. And that's when China opens, but the market won't wait for the 5th. In GLD, as long as you stay embedded, you're entitled to corrections in the market. We'll see if it can still pick up and make a run that is further here. In SLV, you got up over this high right here. So I should have a blue arrow pointing up from here. But here's what I think is going on. I think you're caught between the upper Bollinger Band in black and the lower one. And I think you're just whipping people back and forth, going nowhere for a while. When we come to the copper market, it's been waiting, I still think, for the Chinese buyers to return. But look, this is a new high for the move as they're waiting. Admittedly, the volume isn't big. Nothing's happening in a major way, but they're unable to really break the market so far. I have my clients long in this market, still looking for higher prices. Via my updates, my morning updates, that is, and that's where we talk about trade ideas. TLT, higher high, lower low. You can see where we're at. UUP, I was telling traders today to buy the euro, give up on the dollar. Don't be short the dollar and long the euro. And it just looked to me like this was a better chart. And I know most people like to buy, not sell, so I put that out. And we had our live webinar. We had a lot of people in it, so it was great. It was a lot of fun. We got through all the questions that I could. I mean, there were more. I just couldn't get through them. And as usual, some people will wait to send me stock questions right at the very end. It's via your, when we hold the next one, it's via your confirmation. There's a link in there. A form comes to me. That's the way to do it. Not write me the day of it. Can you still do this? I'm not going to have time. There's that many people with that many charts. We probably covered today, 40 charts. It's a lot with talking about them, answering questions along the way. But that brings me to this. Why aren't you joining me in the mornings for the SPDR ETF stock videos? It doesn't make sense that you're not. At 9 in the morning, I begin recording. Why 9? I want to get out of the way the U.S. reports that come out. I cover a slew of markets. This is just some. We're always rotating. So don't go by what you're seeing as always the ones. Today I put back in stocks, as you can see. So I'm doing all these different, and I'll rotate that out for another one. People will write me, Ira, can you cover this? If I see there's enough volume and open interest, I do. I will move them in and take things out, and that's how we do it. So it's going to be a lot of fun for you. And what do we try to do? We're looking at the market from both a longer-term point of view via the weekly charts, and we're using the daily charts for the trading aspect of that. Sometimes the two come beautifully together and you hold, and a trade's good until it isn't good. I don't know what else to say. Am I looking for investments? No, I'm looking for trades. There's a difference, all right? Using the leverage the market has, using your leverage, trying to look for the market up to key resistance, but are we willing to hold for the longer term? Count on it. We are. And some of the trades we have on now are proving that to you as they're sitting there. And we have a lot of trades on. So want to join, want to be involved first thing in the morning. You write down what the trades are. You go out, you look at your own charts. You at least see the chart action and why I've constructed the trade every single morning, Monday through Friday, and then on the weekends on the weekly charts. And during the week, I will bring in weekly charts when I see something. How do you get this? Move your cursor to the top up here. You'll see an icon. Give it a click. Go to our website under the word education or call my staff. Any of that will work. I'm Ira Epstein. You have a great day. I'll see you tomorrow.